Hey there, random internet strangers. It's Random Crypto Guy with the worst crypto channel on YouTube. Dun 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 dun. Bow chicka bow wow. Okay, we got a lot to go over today. So I want to get right to it. We got a review of an online trader, compound interest, and the Bitcoin crash. Yes, you heard it here first. So let's get right into it. Get rid of that. The first thing is online trader. I've been following this guy. His name is Brian Watt, also known as Mr. Yen. He's a very interesting man. He's been high on the hierarchy of the corporate ladder. I believe he's been a CEO or some type of high-level executive position. And he's recently, I know that he doesn't mind me talking about this because he has talked about it publicly. I don't know him personally, but he's a very interesting character. As a personal trainer, I used to work with CEOs and CFOs and a company that I used to work for. I had clients, so I got to know him. And they're a unique brand of people, these CEOs, and he definitely fits the profile of one. Very A-type personality, very forthcoming, and he's recently diagnosed as cancer. You can learn a lot more about that from him if you go to his YouTube channel. And the reason why I'm following him is that he's just kind of letting you look over his shoulder as he scalps different markets. And then he has commentary. I'm going to go over his scalping methods real quick, a couple of them, just to give you an idea of what he's like. What he does. First one that I first jumped on was this chart right here. Let's zoom out a little bit and take a look at this. This is the 1 minute chart of the S&P 500, and this is a Heikin-Ashi smoothed indicator. I can't remember the exact numbers that he put onto it. And then we have this channel here. This is the 5-minute zigzag linear regression channel. And what he does basically is does what's called a mean reversion. Now, think of the Heikin-Ashi smooth as just a moving average. And he's taken the price bars and the lines off of it. The price is not showing on here. It's just the only thing he shows is the actual price line, which is right here, the purple, the magenta line. And then what he's looking for is what's called mean reversion. And what that means is that price eventually has to cross over the mean, the average. And once it does that, it extends out and gets super extended to a point where it has to snap back to the mean. And so what he does, this particular chart here, is kind of a double mean reversion. When the first mean, this is a mean here. This line here, the center line here, and then this the zigzag indicator of the 5-minute swing high and swing low of what's on the page, what's on the chart in front of us. So what he does is when we're down here below, he's looking for buys. It's a reversal type system. And so once we're below here, he starts looking for buys. And then what he'll do is he'll look for this price, this line here, to extend away from the Heikin-Ashi smooth indicator. And once it stretches out, what he's doing is, and then he'll start putting little tiny orders on there. And martingaling in, and then it'll snap back because the price eventually has to come back to the mean, and then tries to get the average of all those martingales once it snaps back in to the mean to be in profit. So, and then he just takes his profit. It takes it off one at a time. I haven't quite figured out how to do that yet to where it would be profitable. What I had been doing, I've been following him along a little bit. It's not my favorite style of trading, but it is a good one. It's kind of like picking up pennies in front of a steamroller, because you got to have a big account if you want to go martingale, and you can do real small. And so we wait for that snap back, and what I've been doing is just closing everything out when it snaps back. I have a indicator here. This one here, the script actually, close all script. that allows me to just not automatically close everything out once my balance is showing that I'm in profit. And it's martingaling is something that you need a big account to do. I suppose you could probably do this on Oanda and just put on units, but like I said, you take $1,000 account and you're going to be earning 10 cents, maybe $1 for each. Not even a 1% return, like 1/10% return. That's how small you got to go as compared to your account size. Because I know that in Oanda or Oanda, or however you want to pronounce it, you can do single units. But then again, like I said, it's like picking up pennies in front of a steamroller. So it's like not my favorite way to trade, but it's definitely a safe and effective method. The other method that he showed, I kind of took some liberties with it, is that this is what he calls the cloud, and reverting mean reversion back to the cloud. He waits for 6 candles to be floating, levitating below the cloud or above the cloud, depending on, like I said, you wouldn't be trading in here. And I have this squeeze indicator that tells me that when these are close together, that's a no trade zone. And then we start to look for trades here, but he didn't get his 6 candles, so we wouldn't be trading this last little bit here. But this is a good example here. So we wait 1, 2, 3, 4, 5, 6 candles. So we would start looking for a nice extension, and then he probably would have entered probably here, and then maybe again down here, and then everything snapped back here, and he would have made a small profit, martingaling in with little tiny orders in here, and then snapping back once it touches, goes back, and his take profit average is in profit once it touches the cloud. So this would have been a nice trade right here. And then maybe again here, you don't have your 6, hesitate, you don't have any 6s. So and there's nothing here after that. But that's what he looks for, and it's what I call mean reversion inception. You have a mean reversion inside a mean reversion. And just this floating, levitating candle system, that's the outer mean reversion, and then this here, the cloud, is the inner mean reversion. So that's what he does right there with that. So I recommend that you follow him. You can scroll back. It's Mr. Yen, and I'm not following for the trading so much. I want to know his insights because he knows traditional markets way better than I do. So I'm really interested in his insights. Moving on here, we'll go into the S&P. This has to do with my 401k. This is just stuff that I'm doing. You do what you do, and I'm going to do me, but I'm just showing you what I'm doing. My 401k, I have one instrument where I can trade a single stock of the company that I work for. It's a major 100, 100 company, top 100 company. So it's going to follow the S&P pretty much, just what everything else is doing. And we're looking at a second shoe drop, I think. Whether it hits this demand level, these are daily demand levels, whether it's got a small one setting up here at 28. There's one here at 27. I know Mr. Yen is talking about buying at 24. I know that Warren Buffett is also all in cash right now. He's just tweeted out that he's all in cash, waiting to look for the other shoe to drop and to look for a place to buy. But these are the areas that I'm looking at as well. But because I have a 401k account, what I'm doing is I'm sitting all in cash with what I have, and then my future contributions are going into the stock of the company that I work for. So I'm going to be buying on the way down and dollar cost averaging while we're down. And if you remember back in my other videos, I talked about where you want to be dollar cost averaging when there's blood in the streets. And that's, I don't have that indicator on this particular chart, but I have this one, which pretty much does the same thing. It tells me when to start accumulating in dollar cost averaging, and then when to hold and wait for until you get back down, maybe sell into these wide areas. And then So we're dollar cost averaging into here. Now I didn't start because I didn't get this right away. I wasn't paying attention. And so I'm starting here because I'm expecting this second move to at least 27.45, if not down to 24. I think that's where both Mr. Yen and Warren Buffett are leaning towards. I don't think we're going to get to neither one of them talked about this level here, which is a very small daily level. This is just basically the bottom. So we're looking at, but this is a pretty thick, solid demand area. So it's looking pretty good. This second shoe drop, I'll expect, a little small bounce here at 27. This is the daily chart, by the way. So this is time sensitive, and I actually do it on the weekly chart. But this particular indicator doesn't show on the weekly that well. Moving on to Bitcoin. This is the 4-hour. I'm just gonna expand out. I'm not gonna put anything. I'm gonna do a nice clean chart. It basically looks the same, a little bit stronger, but the same as last week. We had this nice spike up, rejection, and then a springboard action. And that's what we're doing here, except now there's a little bit more volume behind it, a little more oomph. So we went up here, that was just, 2 candles, so that was 8 hours versus 4, 8, 12, 16, 24 hours. 24, almost a day and a half of, almost 2 days of price action where it shot up. And then now it's doing the same thing here, just slowly building a springboard up here, but this time you can see the volatility is increasing. That's a good sign that it's nice and bullish. Getting nice upward pressure here, all the candles coming up here, although the wicks are much longer on the bottoms than they are on the tops. We had these rejections here, we busted through it. So this is the final rejection here. And I didn't put up the other chart to show where the next rejection point is, but I suspect it's going to be about 96, 9800. It coincides with right here at this line right here. So there's a 90, I see, be 96 again, and then we go up to the next level would be probably right about here, which is, I can't see it right now, but anyway, that's what we're looking at. This would be the next rejection level right up here. No, that's just short of 10,005, so probably around 98. Moving on. A lot to talk about today. We talked about Mr. Yen. We're earning interest on our compound. What I've done is I posed a question to both BlockFi and to Celsius. And what I'm doing is I have deposited a Bitcoin in one of these. I've deposited Bitcoin in one of these, and I'm earning my interest in Ether because I want to collect my 32 Ether. And what I questioned was, does the interest that I earn in Ether, does it compound on itself, or do I have to get the compounding through to roll back like Bitcoin to Bitcoin? Like I earn interest, I put my Bitcoin in, I get interest in Bitcoin, and I roll it back into that account. Or does my Ether start to collect interest? Now, I just got my first Ether payment, so I pose this question to both these because I want to find out, well, what each of them thinks about that. So that's I haven't got an answer back on that. I was going to do and depending upon the answers that I get back is what's going to determine what I'm going to do next. Until then, I can't really say much more about it, but as you can see, maybe you don't want to earn in crypto, but it's still earning 8.6% interest on USD coin, so it stays in the dollar, but it's in USD coin, and they loan it out to banks and institutions. They're not loaning it out to Joe Schmo. These are high quality clients that they loan this money out to. So the risk is rather low, but once again, the flip side of that coin is not your keys, not your crypto. So you have to think about that as well. That's all I have for today. Thanks for stopping by. Hit like and subscribe if you like what you hear, and see ya.